So Bartholomew, have you heard about that new digital currency?
The electronic check?
No, it's called blockchain, I think.
2 chain?
Blockchain.
Huh?
Hey Bitsquad, and thanks for tuning in to this episode of Bits and Tokens. On today's episode, we'll be talking about IRS reporting and your cryptocurrency. I just want to make a quick shout out to all our new subscribers. Thanks for being with us. And if you're tuning into the video for the first time, make sure you subscribe if you like what we got and you want to see more of it. So, IRS. Now, the whole purpose of cryptocurrency, I'll just say it from the beginning, for me was the decentralization. And now we're getting the IRS involved. So, for those of you who have incurred losses this year, I'll go over this real quick. So, you can report your losses and make an offset to either a job or any other gain that you've had throughout the year. And you can basically reduce it as a capital loss. So, the way you do that. So there's this form called the 8949. Basically, for the taxation purposes, Bitcoin or cryptocurrency can be seen as a capital gain or capital loss. Now, what does that mean? That means just like stocks or a house or a car, you can report it as a gain or a loss on your tax form. You're able to report up to $3,000 a year. If you have more than that, it can roll over to the next year. So let me put this into perspective. So let's say that you made a $10,000 gain and for some reason things went sour and you ended up making a $5,000 loss. So you take your losses, you minus it from your gains. So you lost $5,000, subtract your 10, you got 5 left over. Out of that, you can only report 3. The other 2 would roll over to the next year, is basically how that would work. Now, the IRS does not require third-party reporting unless I know Coinbase does it where they agree to giving the IRS information if you made over $20,000 in transactions. So that, that was a required reporting, but for everyone else, not necessarily. Now, what does this mean for you? If you choose to report your losses to the IRS, and you want to get that offset, you can do so. Again, up to that $3,000 mark. So, here's my thing. I know recently with most platforms, you do put in your social security number and some other information like your banking information, which the IRS could audit. But there's not really a reason for them to audit you if they don't know you're doing it. So, again, let's say you don't decide to report it. Chances are, unless you're, pushing 20 plus stacks, they're not going to come after you. If you are, that might be a different story. But if you do report it to the IRS, let's say you lost $1,000. You report it naturally. Now the IRS knows that you're doing cryptocurrency transaction, and in the upcoming year, they're going to be like, oh, well, let's check this person out. Let's say you don't report it next year and you make gains. Because you reported it the year before, they may look for you next year, since if you didn't report it, kind of thing. So if you made a gain and they're like, whoops, well, you made $2,000, they're going to flag you. You don't want that. So just to put into perspective, if you guys do choose, to go ahead and, report your losses or gains, if you have to, you have to, of course. If you don't have to, that is something that as an investor, you should sit down and think about. Again, I'll point out the most beautiful thing about cryptocurrency and the way it worked, from the get-go, from when it started working, is that there was no reporting. So it's kind of up to you. And again, on the amount you made, you get taxed for it. So Another thing I want to throw out there, let's say, you know, like the IRS gets to tax on the US dollar because they're a federal agency, work for the US dollar. IRS didn't really create cryptocurrency or blockchain or invest into anything or make it better or, you know, apply to any regulations. They're just kind of asking you to pay a tax on it for something that someone else made. So also put that into perspective. When you're doing this and when you're thinking of doing this, these are just things for you to think about before you do take the step forward and file a 8949. Just make sure you don't put a red flag on yourself. IRS does audit, and happy vesting. I'll see you guys next time. Thanks for tuning in, Bitsquad. Make sure to like, subscribe, and share this video. If you guys have any questions or just want to say hi, make sure to comment down below. I'll see you guys next time on Bits and Tokens.